Hi guys, my name is Nicolette Mashile. I am also known as the Financial Bunny. Welcome to the Financial Bunny TV. Today I want to talk a little bit about investment objectives, what you are trying to achieve, or what it could potentially look like when you are aiming for a specific outcome when it comes to investments, right? So how do you make a decision as to which direction you need to be going into if you are looking to start your investment journey? Now remember, none of my videos constitute as financial advice. If you are looking for financial advice, please do speak to somebody who is certified and registered with the FSCA. So, first and foremost, guys, I thought we had a social contract. You know, when I did politics at university, they taught us about a social contract. And basically, a social contract says we have unwritten rules about how our engagement is going to work. Now, I don't understand. I come here on camera almost every single week. I'm recording financial literacy videos, giving you guys some information when I have information, yet you guys are sitting on information that you don't give me. I'm not happy about that, guys. Like, honestly, I'm like, nobody told me about the MTN MoMo App. Basically, the MTN mobile money app. Guys, we talk about money every day on this channel and nobody has told me about it. Anyway, let me tell you how I even find out about the MTN MoMo app. So, one of the biggest things that I've been trying to do is to penetrate the African market, right? Is to be able to sell my services and sell my products into the African market. And a business strategy that we've been putting together is making sure that we can find other financial bunnies across Africa. So whether you're in Kenya, whether you're in Uganda, whether you're in Zambia, Botswana, Zimbabwe, Namibia, Botswana, we really just want to create this community of financial bunnies that are sharing financial education. Now, obviously, a lot of them will say to me, okay, let's start off with whatever resources you've got. You've got financial coaching, you've got the books, you've got all sorts of different stuff. Let's make sure that we can get all of those into the African market. So then it was a matter of, okay, so how are we going to facilitate all the payments? How are we going to make sure that we can get remittances and all of the things that we've been sitting here thinking about? Because in certain markets also, the banking system is not as sophisticated as it may be in other markets. And when you are running a business, you almost want to have like a standardized approach of how you're doing things. And the reason for this also was so that we can start putting together a little kitty and fund to invest for the business. Because remember, 3 months ago, I got injured and I saw a ghost because I realized that I was the entrepreneur actively making money for the business. And when I'm out of work, it means the business was not making money. So we started figuring out that we need to have passive income for the business, not for Nicolette in my personal capacity where I may have rental properties, but for the actual business. So this was one of our first ways of spreading our wings and making sure that operations within Africa will still go on, whether Nicolette is sick, whether Nicolette is happy, whether Nicolette is traveling, whether Nicolette is doing. So getting a little bit of passive income based on those operations. So now, again, having to find this now way in which you are going to run this business across borders, but also still with wherever we need to run it in South Africa. So I traveled to Botswana for the Women Evolve event, but, absolutely amazing event. Absolutely amazing. If I can just give you guys like a summary, because I really feel like I need to give you a summary. There was a Refilwe who spoke from Botswana Life and the importance of life insurance. There was a lady, I can't remember her name, but she was from the Botswana Stock Exchange. I think she heads up market distribution. Then there was a lady who runs her own academy. Then there was the lady from Standard Chartered who spoke about this analogy of when you're making financial decisions and where you should be putting your money. You should be thinking about today, tomorrow, and forever. Basically, today's decisions are going to impact tomorrow's decisions, or rather the quality of life tomorrow, or what you can and cannot do financially tomorrow, which you will feel in the future. And I was like, oh my goodness, this has blown my mind. So shout out to Bunielo and Bonolo, the two ladies who are at the forefront of Women Evolve in Botswana, and also their big team, right? The team is absolutely fantastic, because one of the things that I then decided to do was to go to Botswana with copies of my books, Coco the Money Bunny, which was Coco and the Apple Tree, and then What's Your Move? So took these books there. And these ladies, while I was busy speaking there and listening to the other speakers, they were selling my books. Like, guys, it was just so seamless. It was absolutely fantastic. And then at the end of the event, some Some of the ladies come to me and they're like, oh my goodness, you've ran out of books. We can't believe this. So I started thinking and breaking my head, okay, how am I going to get more books into Botswana as quickly as possible? How are we going to do payments and all of those things? And as I was thinking about that, get to the hotel and I realized, oh my goodness, we still have more books. So I'm like, okay, I'm not going to travel back to South Africa with these books. So let me just give them to Binielo to be able to sell in Botswana. But I mean, it was the last day we were leaving, so nobody actually had a conversation about, so how is she going to pay me when she sells these books? If I have to pay her a commission, how am I going to do that? Like, literally, we didn't have conversations about that. I get to South Africa on the Monday, and I literally bump into information about the MTN MoMo app. Now, obviously, MTN MoMo app, I'm not an MTN customer. I don't pay it any mind. And then something says to me, no, man. Look into this thing. Because they were talking about payments, offshore, African continental payments, and I was like, no. Let me look into what this app is all about. So first and foremost, the most pleasant information was the fact that you do not need to be an MTN customer for you to be able to use the MTN MoMo app, right? So I was like, shout out to them. So basically how it works is that you can make payments. You can buy certain things. You can have financial transactions on the Momo app. And if you're an SMME, you basically can do African cross-border remittances. I was like, well, this is pretty cool. I really need to look more into this. So obviously, first thing I did was to download the app, registered, and the registration is quite easy, right? It's quite quick, depending on what level of the app you are actually going to be or intend to use. There's different levels of registration. There's a registration where it's just your phone number. Then there's a registration where it's your phone number with your ID number and obviously your I think it was it a selfie I had to do? I think I had to do a selfie or something like that. So there's different instances of the featuring that needs to happen based on the features that you want on the actual app. So here are the cool things that I have now found out about this app. Number one, as an SMME, I can use this app to facilitate what we wanted to do for the business. And this is literally making payments to somebody that is outside of South Africa and not necessarily having to go through their bank account. The second one is if I do have, let's say, people who are working for Financial Bunny and I need to pay them their salaries, I can use, again, this same app to be able to pay them money. I can then get what is called a business wallet on the app, right? So that's now money that we're going to put into the actual app. So I can deposit into the app and then I can also withdraw from the app. So let's say, for instance, somebody makes a payment to Financial Bunny through our cell phone number. We then in South Africa, and they can pay in their home currency. So let's say they pay in the Bupula or the Zambian Kwacha. The conversion will then happen on the app. And then on this side of South Africa, I either need to contact an MTN agent or I can go to one of the supermarkets, the local supermarkets, and I can withdraw that money in hard cash, contant, into my hands. Guys, I think this is pretty cool. I don't know about you, but I think it's cool, right? Now, put that aside and think about yourself as an individual who needs to run your day-to-day living things, right? Making payments, all of this can be facilitated on the app. You can pay, you can buy food, you can buy data and airtime if you are an MTN subscriber. You can pay school fees, you can pay for utilities, you can pay for entertainment service providers. So there's just so much that you're able to do on the app. And then there's also the financial transactions. I mean, obviously, still keeping within SA regulation, you can get some insurances on the app. There's also microloans that you can get from the app. And then also discounts. I think the discounts one is actually quite cool. I mean, if you're self-employed, you know discounts are basically part of your language, right? You're trying to save as much as you can, one. But also if you're an individual who's cash-strapped, interest rates are very high, inflation is rearing its ugly head. We are all trying to manage our personal finances the most responsible way possible, which means money wastage is a thing of the past. We're not doing that anymore. And this app allows you to be able to do that. And I just thought, wow, this app is going to make my life so much easier, and it will also help me in ring fencing because I'm probably going to keep the funds or the proceeds that we're making through the app in the business wallet, and then I'm going to take that whole amount of money and I'm going to channel it into a certain investment strategy, which is the other part of this conversation that I want to talk about, right? So now we know what we're trying to do. What we do know is we need investments that are going to give Financial Bunny an income every single month, and then we're going to take that income and reinvest it into something else in the business. So if you listen to what I've just said, there is a clear outcome that we want from our investment, right? So I always use the analogy of cars. I'm like, if you're driving from Pretoria and you're coming to Johannesburg, how you get here is going to be absolutely important, but it's also important to determine what the getting here looks like. Because let me give you an example. If you are somebody, for instance, that needs to get to Johannesburg within an hour, you're coming here for a party, it's leisure, there's no pressure on time, you could even take an hour, 30 minutes to get here. But if you're coming to Johannesburg because you're writing an exam, you need to be here in an hour's time, you can't take the risk of getting here later than an hour because the implications of that are quite big. And this example also speaks to investments. There is Nicolette who might not have kids, so if I'm investing for myself. Whereas somebody who's got children might be investing for their child's future education. Now, yes, I want to make my returns in the future, but if they don't come, it's not the end of the world because I have de-risked that investment objective or that investment outcome. Whereas somebody who is dependent on this investment to make the money because that money is going to take their children to school, they have to think a little bit differently about which investment that they're choosing, right? So the investment outcome and what you want the money to do and how you're going to use it when it's done is absolutely important and crucial to determining what type of investment strategy you're putting together. So again, for instance, if you are looking for investment, you got to think about how much time you've got to invest, how much money you can allocate to that type of an investment, how much tax you are willing to pay, how much fees you are willing to pay, and then last but not least, how much risk you're willing to take. And then the most important one is, what is the outcome? After all of these things, what then is the outcome that I still want? And there are various outcomes, right? There is an income investor outcome. This is an investor who's looking to derive an income from their investment. And I can give you a couple of examples of income investment. So you could be getting rental income. And that's if you're buying a property, you're renting it out, and you're getting a rental income. You could be getting dividend income. So your strategy, for instance, could be focusing on dividend-paying companies, right? You could be getting business income. So let's say you are buying a car that goes into Uber and is driving people around, and you are deriving a business income. So that we've all kind of get an idea that is an income investment. So you are investing in something that's going to give you a regular monthly income that you then are going to withdraw and actually run your day-to-day activities. Now, there's a further difference that comes in. Let me add another one, an interest income. So you're investing in a high-yielding interest rate. Every single month, you get a certain interest paid into your account, and you've got two choices. You can withdraw that income, again, use it to run your life, or you can reinvest that income. And I want you to hold on to this idea because it's going to be very important when I explain the next part of this. Within the income investment, or income investor profile, there's also a conversation about capital appreciation or asset appreciation. So if you think about the Uber example, for instance, where you're investing in an Uber, or let's say you are a camera person and you are a photographer, videographer, and you're buying equipment, and that's how you build your business. Those assets are what we call depreciating assets. At some point, you paid a certain amount of money. If you're going to sell them at a later stage, you're probably going to take less than what you paid for those investments or those equipment. But in reality, you are still deriving an income from them today. So those are investing in depreciating assets that are still going to give you the outcome you're looking for, which is an income every single month that you can withdraw and actually use in your other areas of your life. However, the asset itself does not have any level of appreciation. Then the next one is the appreciation. And within appreciation, there's also two types of appreciation. If you take your money and you put it into high-yielding interest accounts where you are earning an interest, right? So let's say you're putting in fixed deposits, money market, where you're earning an actual interest. So your money is still sitting in a cash formation. You have not bought an actual asset, right? It's earning interest. It means that you will get a certain amount of interest paid to you every single month. So you're earning but in interest. then you need to make a decision of whether you're withdrawing that interest or you are reinvesting it so that you can earn compound interest on interest. Now, what we're doing there is capital appreciation. So we are actually increasing the value of the actual capital that you've got, right? Because your money stayed in cash form. The second part of that is where you are doing what is called asset appreciation. So you are buying into assets that are going to appreciate in value. So for instance, you've bought a property that's paid off. Naturally, the state of property is that it's going to appreciate in value. So let's say in a very ideal situation, the apartment you're renting out is fully paid up. So you bought it 2010 and you bought it at 500,000. It's giving you a monthly income of 5,000 rand. Now it's 2024. You are looking at your investment portfolio. You realize that, okay, the rental income is adjusted. Now you are charging people 8,000 rand per month, but the property itself is also now worth 850,000 rand. So there's an asset appreciation. Your actual asset, because remember, you now turned your money into an actual asset because you bought into an actual asset. The last outcome that is very important, or two last outcomes. One is capital loss. It means that you actually made a negative return on whatever it is that you invested in, right? So, and this often happens when people buy, for instance, and let's use maybe a car as an example. They've bought this car. They've invested. No, that's not a good example. Let's say, for instance, you've bought into a mutual fund and the performance of the fund is actually negative. So you are not actually earning any type of returns on that investment. It happens in instances also where we talk about high risk, high potential return. What we don't always bring into the fore is high potential loss, right? So you may be leveraging something. It happens in trades where people put a position and then they lose. So you've invested in something that has now turned out, unfortunately, at a loss. The next one that you could potentially also, or maybe let's say you bought a property, you bought it on finance, and then interest rates skyrocket. Now you're forced to sell, and you're actually selling at a much lower price than what you bought the property at. When you even look at the rental income that you maybe have gotten in the last couple of months where you had the property, it does not actually equate to the amount of money that you're now having to sell at, because you're essentially making a loss and you've got to pay the bank back its principal amount plus the interest portion, and maybe potentially penalties that you need to pay if you are selling the property without giving them that 3-month notice, right? The last one is a neutral outcome where you basically are accepting a capital guarantee. So basically you are saying, I've put in 5 rand. In 2 years' time, I want an amount that is adjusted to inflation that equals today's 5 rand. So you want it in 2 years' time, it must still buy you what a 5 rand is able to buy you today, but in 2 years' time. Minus the fees, minus the taxes, you want that amount of money to give you the same value in 2 years' time, in the future, what it would have given you today. So you don't want no loss. You're not really too married to a return or a performance. You just want to make sure that the money is giving you some sort of capital guarantee, that the value of today is the value you will still be able to get tomorrow. So it's important to understand these things so that by the time you have a conversation with your financial advisor, you are clear on what the outcomes that you are trying to achieve are. But it's also important because there's an approach called Rand cost investing, or if you read Nick Magiguli's book, which is Just Keep Buying, where he speaks about you writing down your goals and what your destination is, finding the mutual fund that will speak to those goals, and then you just keep buying that mutual fund. You obviously don't watch the market all the time because you believe in the fund that you've bought into, but you do have maybe quarterly rebalancing and, an evaluation of, does this fund still speak to the goals that I'm trying to achieve? Because in life, your goals can change. Life events will force your goals to change. Now, based on that, it means that you allocate a certain amount of money every single month that will go into this investment or the mutual fund that you've selected. But if you want to do a proper asset allocation where you say 40% of my money will go into investing in income generating investments where I'm going to withdraw that income. Another 30% will go maybe into a capital appreciation type of income investment. And then another one will go into an asset appreciation type of investment. And then the last one, just for, balancing out the scales. I don't mind putting my money in a much lower risk type of investment where I am guaranteed the capital. It is important for you to understand these things because these are the things that you're going to need to communicate to your financial advisor. Yes, they will do a needs analysis, but they cannot tell you what type of outcomes you are trying to achieve. And you need to be able to have the language and the understanding to be able to articulate these kind of things to them. I hope that helps you in figuring out where to start in terms of your investment journey. And I'll see you guys on the other side where I'm going to tell you how the MTN MoMo app has facilitated this entire strategy for financial fitness bunnies. I'll see you guys on the next one. Bye.